Hello there, Maverick Currency traders. This is Rob Reinhold. It is February 25th. Let's go ahead and jump into the day. All right, we got another pullback in equities today. And not only just in equities, but everything continued to pull back in a risk-off move across the board. We talk a lot about correlations here at Maverick. And a lot of times correlations work really well and sometimes they don't. Right now, they're working perfectly. This is a textbook risk-off move. We've got equity selling off, we've got the dollar selling off, we've got the 10-year bond rates going down, and we even have a little sell-off in gold. So basically, anything that's considered risk on, I shouldn't say that gold is considered risk on, it's its own animal, but we're getting this sell-off. And we saw that in the currency market as well. We saw the yen and the Swiss franc do really well. So look, we're getting this pullback, this risk-off pullback, and it's definitely, like I said, a perfect correlation of what should happen. This came from the U.S. Consumer Sentiment Report. We got a Consumer Sentiment Report on Friday that showed the exact same thing as this one did. And actually, this one was even worse. So what spooked the market Friday that caused a sell-off was a consumer sentiment number. This one was even worse than that one. So the market continues to sell off lower. And like I said earlier, we're seeing this continued risk-off move across the board. Yen and Swiss franc were the best performing currencies. We've talked about the dollar, and the dollar is likely going to continue to go lower. The dollar has been up and up over the last year because people think the Fed is going to be the tightest central bank. Now, it's no longer the case. I think the dollar still has some ground left to give. The one thing that did surprise me today was the strength in the euro. And that's really what I want to focus on in this session was the euro strength was a little bit surprising given the fact that it's not really a risk-off currency. But when the dollar's falling, the euro probably gets a bid. And you can see here the CAD was the worst performing currency on the day. Aussie, Kiwi, they were down, but just down a little bit. I talked about this over the weekend. They are very weak at the moment. And I'm not saying they're going to get strong, but what I said is they're likely bottomed out in the short term. I still think you can be short them, but I think they're not going to be the primary driver of your trade. What I mean by that is, let's say I went short Aussie yen. I'm really not going short Aussie yen because I think the Aussie is a great short. I'm going short Aussie yen because I think the yen is a great long and I just need something to pair it up against. And I don't want to pair it up against the Swiss franc, the euro, the pound. So I'm just going to pair it up against something that is going to likely remain weak, maybe not fall much more. I think that is what's going to continue to happen here over the next week. So I think that is the trade here. Really, yen, Swiss franc, maybe euro on the long side. And I'm not saying that I think the CAD, the Aussie, and the Kiwi are going to fall. I just think they're going to remain weak and be probably the best pairing against those risk-off currencies. We saw equities pull back, so S&P pulled back 0.5%, but at one point it was down a full percent. We basically saw the markets recover about half their losses. Crypto at one point was down like 4 or 5% as a basket, and it recovered as well. And you can see by the end of the day, everything would pretty much recover to flat except for Bitcoin. Now look, that's a big move in Bitcoin, but it was a 6% move at one point. So we're definitely off the bottom. The question is, was that bounce that happened today, was that the bottom? And again, here's the S&P, and we talked about this support. This support at like 59.40, and you can see that long lower shadow. We came down, we pierced it, and then we recovered. The question is it going to be this kind of a candle where we continue to move up off of that low? Or is this going to be simply just a little stop along the way before we move lower? My personal belief is that we are going to move lower. I do think that's going to happen. But that is simply a personal belief. And guess what? And one of the things that I am the most proud of is that I no longer trade my opinion. And I know that sounds strange, but work with me here. My opinion is this is what's likely to happen. And that's based on, my experience, but also is based on my biases. It's my feelings. It's probably based on what happened over my last couple trades. It's not a good way to trade. The best way to trade is off the charts. And so until this breaks, until 59.40 breaks. And it has to break, and then there has to be a retest of that level and fail. Until that happens, I am not allowed to be bearish. I'm not allowed. It just, again, like I said, that is my rule. I am not allowed to be bearish until that has happened. So while I might feel it, while I might think it, I could write a good essay on all the reasons why it's likely to happen. But guess what? I can't trade it until it actually happens. This rule has saved me so many times over the years to just trade the market in front of you. So at this point right here, it's a neutral. It's a neutral to slightly bearish, but that is it. You cannot take any real serious trending positions until you get that confirmation. The only thing we have on the schedule over the next 24 hours is Australian CPI. So Australian CPI that comes out in a couple hours. If you're playing the Aussie, that's definitely going to be important. But other than that, we are now just listening to President Trump talk about the tariffs that are likely to come onto Canada and Mexico, and also waiting for Friday that core PCE index is going to be the next major report. So let's go ahead and take a look at some currencies, and let's score them all from +3 to -3. Let's check first on the yen here. So the yen, you can see we've got everything moving forward, just made new swing high, rising 13 EMA, rising parabolic SAR. Our RSI is not rising anymore, it's flattening off, so it looks good, +2. Swiss franc, does it look like it's going to continue to run? You can see, same thing, new swing high, rising EMA, RSI peaking out. This is where I think the euro actually looks like the best trade here. It still has more of a rising RSI. We've made the turn. So if I'm going to rank the things I think are likely going to continue, surprisingly, I'm putting euro above Swiss franc and yen at this point. And then what is likely to keep following? Well, let's see. Where's the CAD? Right now, the CAD has, again, fallen apart, falling EMA. But look at this RSI. We're in this area where it's likely needing to have some relief here. So for me, CAD, which was the best trade, not the best now. Let's see if we can find something that still looks like it's falling. You can see the Aussie still looks like it's falling. We do have some support right in this area. We held on, but any sort of rally, I would love to get short the Aussie. And let's take a look at the Kiwi. Same thing here. Kiwi looks to be my favorite here. We've got the most amount of room between support and this RSI. It's got some more room to make its way down. So look, I think the Kiwi probably looks the best here by the end of the day. So here's my velocity scoreboard. Euro looking the best. Yen and Swiss franc look perfectly fine as well. CAD is looking the worst, but I think CAD is likely to have a little bounce here. So I'm looking for that Aussie. So it's pretty easy on my pairing here. My number one pairing is going to be Euro Aussie long. And then we'll take a look at Swiss franc and yen against the Aussie as well. So let's pull up that Euro Aussie and see where it is here. Okay, we just had a nice run. So we ran up, pulled back, ran up. Okay, we're having either a base or a pullback. At some point, we don't know what it is. We'll know it in the future, but right now, so there's no real reason to run in and get it right here, right now. We do have that CPI report come out. If that CPI is bearish, I think Euro Aussie long is a great looking trade here. Looking at a 1 hour, yeah, we're getting a nice base here. So this looks really, really good to me. This is my number one trade here over the next, 12 hours. Let's go ahead and pair up, Aussie against the yen and see how it looks. I will want to be short on this one. But look at this is just great because take a look at this. We've had this base here and this base broke. And what was support is becoming resistance. This one to me looks like a great setup. Aussie yen looks like a great setup as well to the downside. And I'm sure Swiss franc yen probably looks good as well. Sorry, Aussie dollar Swiss franc. That's what I meant to say. See, you're getting a little bit of a bounce here. So that means that Swiss franc is actually weakened compared to the yen and the euro since we're getting bases there and we're getting a little rally here. So for me, I would stick with Aussie yen or Euro Aussie. Expect intraday volatility to be here. Again, we got lots of tariffs news. We got lots of news about Again, politics, everything is in play. Just expect there to be more volatility. More volatility means you should have wider stops and a smaller position size to be able to ride out the moves. If you're trying to trade the same way in a high volatility market that you are in a low volatility market, you're going to get stopped out all the time. You're going to have like a 80% loss rate. Not because you're doing it wrong, but because your stops are tighter than the current volatility. You must adjust it. One of the reasons we use ATR at Maverick so much is that automatically adjusts it for you. If you have any other method, you must be having wider stops in higher volatility and rising volatility. That's just how you ride this out and how you play the game. Thank you so much for joining me. That is the Currency Recap. Goodbye, everyone.